Hi, and welcome back to another episode of the Mortgage Musketeer, where today we're going to be talking about 401ks. Can you buy a house with a 401k? Yes, you can. This video will break down how do you do it and how do you get through underwriting. Not whether or not you should, but how do you use it. Check out my sign. Intro. Okay, as I mentioned, what we're going to be talking about today is how do you use your 401k to buy a home, not whether or not you should. Whether you should use it or not is a really good topic for another video. I'm actually going to leave a link at the end of this video to one I ran into that actually breaks it down pretty well. So that'll be useful for you. Now, as far as a loan officer perspective, using a 401k is one of the easiest ways to show your assets. I've talked a lot about assets. Cash is the devil. I've talked about how we have to source your funds. The 401k is hands down one of the easiest ways to do it. I'm going to focus on two different types of loan products, the conventional loan and then the FHA loan. And the reason for that is because USDA and VA loans, the majority of the time, we are going to try and get the sellers to pay your closing costs so you can get in with basically zero money down. So that really only leaves FHA and conventional where we have to source some funds. So with a conventional loan, hands down, one of the easiest ways to source funds is from the 401k. If your loan officer asks you if you have a 401k with a conventional loan, don't try to hide it, because the way that the lending guidelines work, it is the easiest way. All we have to do is show that you have enough money in there and the terms of the withdrawal. Terms of the withdrawal for a 401k are hands down the hardest part about a 401k, because every single one of these are different and they don't always make it easy to find. So be prepared. If you're going to buy a house and if your loan officer is asking for your 401k, also know that we're going to need the terms of the withdrawal. Look them up. Every website is different. Some are easy to navigate, some is really, really hard. So see if you can find it. If you cannot find the terms of withdrawal, go and talk to either your HR, your payroll, or whoever manages your 401k and see if they can provide you terms of withdrawal. Sometimes we get lucky and we find them online. Really what it breaks down to is what are the terms of that particular 401k? And they're all different. Do they allow you to take out 100%? Do they allow you to take out only 60%? Do they allow you to take out an even smaller percentage? There are different rules for every one, which is why they want the terms of withdrawal. Sometimes we run into scenarios where you have already actually withdrawn funds from the 401k in anticipation so that you have money in your account, and when that happens, you still need the terms of withdrawal. And I know that seems silly, but it's just part of the regulations. So know that they're going to ask for it and know that that's the most challenging part. So as long as you do that, on a conventional loan, super easy. So if there's enough assets in there, if you have enough in your 401k to cover your down payment and your closing costs, done deal. It's that simple. I don't have to show it moving out of the account. I don't have to show it debited. I don't have to show I don't have to do anything. I just have to show that you have enough funds in there and then show the terms of withdrawal. And there you go. Everything is sourced. Now, a 401k operates off of quarterly statements. So depending on when you're buying a home, is your last statement might be a distance from where you're actually doing the transaction. If for some reason you have to show the money, or you have already shown the money, like you already took it out of your 401k and deposited, we're going to have to source it back into the 401k. Right? So when that happens, if you got a check, we need a copy of the check. All right, and I'll talk more about that in FHA. So we're going to have to show 60 days of bank statements, and we're going to have to show that money deposited into the account, and then we're going to need to show it debited from the 401k, which means if you had a quarterly statement, then we're going to need a transaction history from the end of that statement up until the point where it was debited from your 401k, because that amount, assuming it's direct deposit, will match the same amount of the deposit into your account, and then it's sourced. Okay, so if you did withdraw it already, that's what we'll have to do. All right, now if your 401k, you get a check for that, ensure that you make a copy of the check. Then, as I've mentioned in other videos, deposit the entire check. because we have to show the exact amount. So the deposit needs to match the check, which means needs to match the debit from your 401k. And when we do that, it's sourced, okay? That is exactly how you do it with an FHA loan as well. Now, the difference between a conventional loan and an FHA, where with a conventional loan, I don't necessarily have to do that if you haven't taken the money out already on a conventional loan. On an FHA loan, we're going to have to show the money debited from the 401k and deposited into your savings or checking account. And when we do that, same process. We're going to need the quarterly statement, that's your base statement. Then we're going to need a transaction history showing where it's debited. If it was direct deposit, then we need a transaction history from your bank account showing that where the money went in there so that you have sufficient funds. If it is a check, again, make a copy of the check before you deposit it and make that singular deposit. Don't put other money in there with it, because we need to show the copy of the check at whatever amount should equal the same amount that is deposited, which should equal the same amount that is debited. And that's how you source it. And of course, you need the terms of withdrawal on the FHA. Okay, so that's how you actually go through the process and source a 401k account. Otherwise, it's really pretty simple, because you pull the money out, we source it, and we put the money in. Too easy. All right, so a lot of people make it more complicated than it needs to be. Just understand that's how the process works from a loan perspective and from an underwriting perspective. Super easy, except the terms of withdrawal. So take a look at that and see what your 401k does as far as that is concerned. Okay, hope this was helpful. Too easy to do. Leverage your 401k if it makes financial sense.